Good evening, everyone. This is Rodney with the Triton Wave Market Outlook for Tuesday, February 19th, 2013. All right, you can see from the S&Ps that the last 3 days since I did my last broadcast, absolutely nothing has happened on the S&P. Sideways, 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 sideways. Very small range, about 6-7 points each day, and it continues to hug the 8-period exponential moving average. So let me go over a little bit of news while you're looking at this, but I wanted to show you also that as this is going up and right along the 8-period moving average, the trading wave of T1 keeps moving down. So it's not really a good sign. All it means is that it's just like marking time. And if we look at all the tops from the past, this is actually the entire move all the way back here. Let me get a little circle here. That's 2009, and this is like 2011, and now we're at tops here that we haven't seen since, go back to the weekly. You know, it looks like it wants to go up to 1567. I don't know if it has the juice to do it, because there are too many other things going on in the market that I wanted to bring your attention to that are always in the background, not necessarily of day traders, certainly not of day traders, but and not the small time trader, but of the huge pension funds. And that is that data collected from the 100 largest public pension funds turns out that they reported a 75.1% funding of all their obligations. But then an actuarial firm, excuse me for my mispronunciation, of Milliman found an aggregate level of 67.8% funding, leaving a $1.2 trillion gap, or what I am calling a trap. So the difference was basically 900 billion that the pensions reported and 1.2 trillion that the actuarial firm reported. So you know, if you put a positive spin on it, you say a gap is a gap, and the pension funds weren't that far off, and at least they're somewhat in the ballpark. If you put a negative spin on it, whether it's 900 billion or 1.2 trillion, who's going to make up the difference of 1.2 trillion? It probably in the end it's going to be you and I. It's going to be QE5, QE6, QE7, whatever monster plan is, you know, like hiding in somebody's mind in Washington of how to cure this. Because there are dwindling revenues and tighter budgets for state and local governments. And this has not improved. There have been bankruptcies in state and local governments all over the country since 2008, and that has not improved. Okay, so the other piece of news is that in Moscow, the group of 20 finance ministers and central bankers during that meeting, Jens Weidmann, who is the Bundesbank president, said he said, quote, politically motivated devaluations can't sustainably improve competitiveness. They don't solve structural problems, and they set off reactions. Now, while they also implicated that while Japan was not singled out, the message was very, very clear to Japan. If you would like to refer to a further analysis of why these trade wars, or actually they're not trade, they could turn into trade wars, but they're currency wars. Please refer to the February 11th broadcast on YouTube that I did. All right, so if we look at the 21 period, 21 minute, sorry, cash price on the ES, you can see that this is sustainably up ever since January 2nd, when it gapped up. And this long wave on T5 just keeps on moving up, while the smaller waves on T1 are actually very, very tradable. Right now they're below zero, and it looks like after this long, let me see here, after this long move up this way and then a long move up this way, that it's starting just to break a little bit. It could continue up because on the left-hand side, this is like the magic wand here, this 8-period moving average. Just so that you know, this worry that I'm talking about is forefront in the minds of people who hold billions and trillions of dollars in funds that are trading. And they will be, if they have the slightest inkling of any kind of trouble, financial trouble, then not their own personally, but like European bank troubles, the ECB troubles, they will be out of this market in a heartbeat, and they're going to have the upper hand because they're getting out first. You're going to be riding it along, thinking everything's going to be okay, and just playing this bounce off the 8-period moving average, and all of a sudden it's going to be the 21 period, and then it's going to be the 55 period, and it's going to be the 89. You're going to be left holding the bag in long positions. So just be very, very aware. Okay, if you are a day trader, you can trade these very nicely. You can use the C wave, not the C wave, I'm sorry. Wave number 3, T3 right here, went up on Thursday, and then took off right about here. That was good for about a 6-7 point move, and then came down just before the close right here. On Friday, same thing happens when they become really, really clear, like right here. It's the same as right here. So you get this whole down move all the way across into almost just before the close, and your exit point is one of the shorter waves, like either here, which is here, or right here, which is right here. So it's up to your discretion. I usually play the shorter waves as an exit point and the longer waves to get in. Okay, so I want to show you what we did in gold this week, and I only do this for private clients. I don't do videos on it, but since this already happened, I will show you what I did for my private clients, and this includes sometimes texting in the middle of the day when there are sharp moves, or end of the day moves, and videos to supplement it once a week. So we look at gold over here, and it looks like before all this happened, there was like everybody was looking at this line here, going this way, and it's like a triangle, a flag. So the consensus was up, up, up. I mean, that's all I kept hearing all week long. In the meantime, my waves were, whoops, I got the wrong indicator here. My waves were all below zero, right here. So you can see, whoops, hang on a second. You can see that even though this could have gone above zero right in here and taken this to the upside, when you look at the 21 minute in this same time frame, which is back right in here, because this is like, whoops, arrow, Okay, this is where it broke, and this was the flag, the same represented on the 21 minute that's on the daily on the left-hand side. All right, when this broke, this was going below zero, this was going below zero, this was going below zero, and then one went into the next, went into the next, went into the next right here. And I advise my clients that this is definitely a short right in here. They all made between $60 and $80 per troy ounce of gold. So I just wanted to let you know that there's an even better representation in silver. Okay, so I took my cues from watching silver, because the same thing that happened excuse me, on silver for this major flag that was going on right here, that you can see in the 144-minute chart here. Now, it's not that silver broke before gold, but on the 144-minute chart, you can see these moves in silver right here, which is in perfect synchronization with the low right here. And this is when it busted from the top and went down $2 or $3, and then when it went back up. So you can't see this on gold, but for some reason you can see this on silver. So I took my cues from the silver move, and that happened. Let me clean this up a little bit. That happened right, just follow that line right up there. So that ended up being a spectacular move in silver from 31.35 down to where it is right now at, let me see, the current price on silver is, it's up 15 cents right now, it's $30 even. But it was down, oh, whatever this low was, 29.70. Now, do I think it's over? Actually, in fairness to the people who I do private consulting to, I can't tell you, but if you want to become a client, please email me at tritonwaveguide.com, and I'll give you the information that follows this. But I do daily and up-to-the-minute texting if necessary during the daytime. Have a great day trading. This is going to be a very, very exciting week in gold and silver and the markets. And I will see you at the next update. And this is going to be followed by a little blurb of the services that I offer. Okay, I have a Triton Wave Consulting service. It's a concierge service tailored to your needs. I will leave this up for you to look at. You can pause it, but I'm just going to kind of run through it. This is the fee structure. I now do gold and silver for private consultation. Right in here. Let me see. This isn't going to go down until I get rid of this. And the National Association of Day Traders recently called my work a major new trading tool. So please, if you are interested in this work and want videos in a timely fashion, then text me at tritonwaveguide.com. And my name is Rodney Julian, and I will be happy to talk to you and make arrangements with you. Have a great trading day.